In this video, we are looking at the REVIN ribbons. This is the base indicator in the ribbons suite, the indicator upon which all other indicators are built, and a bit more on the complicated side, but default settings for this indicator just work like magic for me. I love it. So let's jump into the indicator itself, and then we'll go through all of the customizable options. We're looking at the daily time frame for Bitcoin. We might jump into a few other time frames, but this is useful across the board for any asset, anywhere, almost any time. I do find that from the 1 hour to the weekly, maybe 10-day is the most useful on Bitcoin because Bitcoin can be pretty volatile, especially early on. The monthly does not have much usable data yet in 2025. But it's starting to get there. I generally think that 300 bars of data are needed, and the monthly only has about 100. So definitely has a bit more time to go, but on things like the S&P or others, there's plenty of data to look at, even monthly timeframes. So let's dive in and look at the indicator. I'm going to explain all of the things you see on screen, then we'll go into the user settings and even how I like to take general bias and pointers using this indicator. Okay, so we have our resistance 3 ribbon right here, resistance 2 ribbon, then we have our resistance 1 ribbon, our midline, our support 1, support 2, and support 3, and these dotted lines are called the dotted resistance midline and the dotted support midline. And I do find that on the daily especially, there is a lot of price action around these, especially if you are in a consolidation zone. Very, very helpful and useful to find the direction. Even recently, when we saw it close above this, that was the start of real breakout. I suppose the real start of the breakout actually was when it closed above this support 1 band, and we just saw this massive push to the upside. All right, so let's look at the table, and then we'll look at all these settings. Then I will dive into how I set up the indicator and bias I take from it in general. None of this is financial advice. Users have to decide how to use it for themselves and all of that good stuff. Okay, so the first thing we see on the table here is the proximity, the resistance proximity currently, because it is between the midline and rather it is above the midline. That's going to read resistance. If it is below the midline, that is going to read support. This is a historical price read based on data from this indicator and price action. What I mean by that is once it gets over 100, which you can see it's at 96, it is looking at percentile breakout extremes. When it's under 100, it is just showing you where it is on a 0 to 100 read between the midline and resistance, or midline and support. Let me put it in bar replay mode so you can see it in action. I'm just going to hit continue here. And we can now see that on October 2nd, this was in a breakout position above the resistance band. Now what you see here is B63 with an up arrow, which means it is in the 63rd percentile. I wouldn't necessarily call it the 63rd percentile. Basically what this does is it looks at all past breakouts, averages them together with some math and data I programmed in there, and gives you a read based on that. So if you see 100 here, that means it is the most extreme move that in this price action history it's had. I think it looks at the past 500 breakouts and does that, which should be plenty of breakouts to give you some useful data. So again, if it's at 100, that means it is the most extreme in the last 500 moves that it's seen breaking out above the band. To be fair, that might mean that it's in a very extreme zone and very likely to pull back. Again, take that as you will. You can find that information useful in whatever way. I generally look somewhere between 75 and 95 as possible pullback areas. Now again, this doesn't mean it's not going to continue on up or down, but it does mean that if you're getting a wick up in that area, very likely to at least have some volatility and pullbacks incoming. So again, if you will put this in bar replay mode, you can hit play and really see this data in real time. The unfortunate thing is it's still blocky, even on the daily time frame. The lowest you can go is a 1 hour. So that means every tick is 1 hour, which means that it won't show the smooth, actual moves. It'll be jumpy, and you won't really get to see the actual percentile in work. I will generally put it on a pretty low one and then kind of at a slower speed so that I can see at least the general idea of price moving and interacting with this resistance or support proximity. So very useful to take some tips from. Next, we have the short-term target. I'm going to go ahead and hit exit from there. So our short-term target right now is, it says held, which means it earlier created this box and it is just holding it because it does not have any more useful data to update it with. I'd be interested to actually know when that that price target was made. I could put it in bar replay, but I won't do that now. I don't have time for that. But it oftentimes does hit the target. You can see the past target is this grayed out blue box. It did hit that very nicely and then created a lower target and is already almost hit that target. The lowest it got was 120, and it is at about 119, 255. So it's about $1,000 difference there. It didn't quite hit that, but it did have a nice pullback, and we'll see if it actually does fulfill that that short-term target. While we're on the short-term target, let's look at the modes that we have. So there's 3 different modes right now, and I actually have a few more updates coming where I will add a few other modes and a few more options there. Then we have our update frequency. I like to stick with bar close. Half bar and quarter bar are also pretty useful. Real time tends to jump around a bit, so I wouldn't find that quite as useful because you might end up chasing your tail a bit because it will bounce around more often. But who knows, you might actually really like that. To each their own. And again, I would just really recommend putting it in bar replay and looking at price interaction or watching it as time progresses. And lastly, the weighted average and Fibonacci levels. These are 2 different methods. Weighted averages are generally going to be better for breakout scenarios. So if I put it on bar close, this will actually be looking at price when it was up here. So it was looking, when price closed off of this candle, it was looking to the upside. But as soon as price started to pull back, the target was brought lower. So this is where maybe having it on quarter bar or half bar might be useful because you'll get some updates, especially if price moves severely from where it was. You'll get an update, and it does look like that target was actually hit. So weighted average and band snap are my favorite. Then we have Fibonacci levels, which are looking at Fibonacci numbers within the bands themselves. I find that sometimes useful, again, to each their own. So that is something I would recommend taking a look at in bar replay. Next on the chart here, we have our long-term pattern and pattern action. Long-term pattern is this orange box, which is a much more distant future pattern, and pattern action means what it is looking for happening once that target is reached, if that target is reached. So rejection means that it will bounce off of that and reject the direction that it came from. Breakdown or breakthrough will mean that it is looking to go through that target. Now, 53% is not a high percent rate of rejection, so it's kind of unsure, but it does mean that it has a bit of a bias, at least long term, somewhere out here to be in this range. Again, this is based on the data that it has currently. Next, we're going to jump into my favorite part of the indicator, which is actual use case for it. First, we got to define some goals for it to actually be useful. So for me, I generally like to look at the indicator for directional bias, for swing trades, etc. If users are wanting to use it for different purposes, you are welcome to set the settings to your liking, and you can find your own use cases for it there. But generally, the default settings are a pretty great place to start, and then I'll tweak these settings in here for different assets or timeframes as I need to try to get the indicator to reflect what I am aiming for the most. Now, I'll explain this. So I am generally looking for the dotted midlines to be our consolidation zones and our swing zones. I'm looking for the resistance to and support to bands to be a bit more of our bullish or bearish bias. So by this I mean if we are closing above, especially above these resistance zones, we are generally having a bias towards the upside. As soon as we start closing below that dotted midline, we're in a period of consolidation and or swinging the other direction. So right here you saw Bitcoin have a nice close above the resistance 2 band. To me, it means we are in a bullish posturing and looking for upside. Now, we had a few candle closes. We had a couple candle closes above it. Then Bitcoin got weaker and weaker closes and was not even breaking this. Finally, we got this last kind of shooting star candle right there. where it could not close above it, and then the next candle closed below the dotted midline. So to me, this is a change in trend and direction, and look for a bit of bias the other way, or at least a consolidation period. So what did we see here after it could not close above the dotted midline? We saw some weak price action where it still continued to close weaker and weaker compared to that dotted midline. Finally, it had a close, just barely, but it had a close below this resistance 1 band, and we saw more downside. We saw a few bounces here where it nicely touched the midline here, bounced up, couldn't close above the resistance 1, and then generally kind of a zigzag pattern down until we finally found some support around the resistance 1. So to me, this is not a bearish posture right now. It is just saying, okay, we're maybe finding some support. If I was looking for a swing, this is usually a very nice place to find a swing. Even on the first trade, that wouldn't have been, too bad. Sometimes it'll close down into it a couple times, but usually 1 or 2 candles into that dotted midline will be a nice bounce zone. So what happened here is it bounced up. We found a little bit of a breakthrough here above the midline. Then we found some support back into the midline, and again up in here. We had a bit of a fake out where it closed above that dotted midline, but it was not a convincing close. What I would have liked to see if we were looking for more upside was a close above this resistance 2 band. So to me, anywhere around here, we're still looking for more of swing trading. So this might have been a place of exit. We saw this nice swing back down again into the dotted midline. Now this hit a couple times, so it had a nice bounce, between the dotted midline and the resistance 1 band. Came back down, touched that dotted midline again, a little bit stronger bounce up, but still could not break above the midline. So we're finding ourselves again in this zigzag pattern between our bands here. Finally, we got our 4th closure here, which was a tiny bit stronger close. You can see that it closed, it wicked down into that dotted midline, but it closed, a nice bit above it. And that was our final pivot here before we got the swing to the upside. Again, the swing went into the midline once, closed above it. Then we continued on to the upside. And again here we found some resistance along that support, or that resistance dotted midline. Right there we saw a lot of resistance there, could not even close up into it, and then we saw our last pull down into this dotted midline. Now we did see some downside bias here on September 25th. We saw a close below that dotted midline. I actually had a bit of downward bias there because of that, but we did not quite close below, so I couldn't be super bearish until we closed below this resistance line here. And we did see that as our last pivot up here into where we just saw this massive run. So we saw a couple bounces back and forth. Again, we never really closed above this resistance 2 band. So again, I'm not super bullish until we're making some closes above here. Now, we did see a nice swing. That was a really great move. But again, we're still in a bit of consolidation right now. And until we can break above this, which is currently at 125, until we can break above 125, I'm not going to be super bullish. We did see the exhaustion point. It got worn out. It couldn't really close strongly, and now we have our close. We just had our close officially below the resistance band, which to me, now we're kind of in this posture here between about 117 area, which that's going to rise slowly over the next couple days. So was at 117 to 119 area, and if we can stay above this midline, I'll still be a bit more hopeful. As soon as we close below that midline, I'm looking for downside back to the dotted midline here, which, fair enough, it's rising. So as this rises up over time, it could be down around 114, 115. But my bias is generally now going to be between 124 and 110. Right now, this is the bias, and until I see any further price action, that's going to be how I look at it. I'm going to actually look at a few other time frames. Let's go ahead and look at the 10-day. We'll maybe look at the 4-hour as well. Looking at the very similar ideas here, where we are a bit more bullish posturing when we're closing above that. As soon as we close below the resistance 2 band, we're seeing a bit more consolidation sideways, bounce back into that resistance 2, but don't have a strong close there. And then we see the rejection off the dotted. Back here, wicked nicely into this dotted support. And again, we're kind of looking at the same price action. I'll go back a bit further so we look at a little bit of other price action. So going all the way back to 2021, this dotted support was just a great area of interest. Now it did, the first touch into it, it actually went all the way down to 29K, which would have been just a really nice scalp trade right there. Pulled back up along above this support band, and then kind of continued down and found its support off of that dotted midline. Again, finding its way up to the resistance band. However, it never had any closes above that. So that was kind of the end of the run there in 2021. We saw the start of the run back here when the 10-day time frame started to close above this band. So again, this is a very bullish posturing when we're closing, and we just saw a massive, massive upside. Where even the resistance 3 ribbon had a close above it. So massively bullish until I started seeing closes below this band right here, which would have been, a pretty great spot to get out of a trade or to, maybe go the opposite direction here in April of 2021. And once we saw our close below that, and especially our close here, which that would have been the most convincing one to me, we just get weaker and weaker price action. So that is my, my general bias for this indicator. And I think, for 10-day time frame, we'll look at a 4-hour. All of these settings can be adjusted very much to match, the user's preferences. All right, in the last segment of the video, we're going to jump into the user inputs and explore all of these options here. The first one we have is Exponent AI. The Exponent AI, my favorite settings are generally 0 or 1, but you can go into the negatives. You can go much higher to 2 or 3. And you can also even go, 0.9, anywhere in the middle. But I generally do find that keep it simple, don't overcomplicate it. As you bring it lower, the bands will be a bit more volatile and pull together. So you can see I put it on 0, and the bands pull together tightly. They're much more extreme reactions to price. And you can see here, even recently, price now was bouncing off that midline. So it kind of depends on what you want your screen look to be. Some of these settings can be different, and you can see here recently price is a little bit more responsive to the bands. So 0 is not necessarily a bad setting. For some reason, I just prefer 1. And again, this is just going to control the adaptability of the bands and price action as it goes. To find the most preferred settings, again, I kind of just will make notes on the chart. I'll take my tool brush and I'll make just general notes where price and interaction with the bands was as expected or was not as not preferable, and then make adjustments from there. Next, we're going to look at band update frequency. This is how often the bands update to the information that is given them through the Exponent AI, etc. So if you want the bands to update a bit slower, be a little bit more laggy, but maybe a bit more smooth, I would take this up to 2, 3, 4, or even 5. I think it goes as high as 10. I believe that was the extreme. Yeah, extreme. It says here that 10 bar is best performance, and by best performance, it means data load is the lightest. It does not necessarily mean price interaction. I probably should change the wording there, but just to clear that up. I generally actually like lower settings, like 1 to 5 is my favorite. Next, we are going to look at the Unified Adaptive Learning settings. It uses adaptive learning and machine learning with price interactions with the bands in the past to control a bit of the smoothing, what I would call the tolerance, which is how far the bands are allowed to expand and contract, and etc. And users have the option to use layer tolerance or machine learning band learning, which is a bit redundant there, but it's just 2 different types of AI learning in the tool. And then you have your adaptive strength and learning rate. Next, let's look at support and resistance smoothing. So this is obviously the smoothing of the master resistance and support bands. So the higher you go here, it will smooth out those bands quite nicely. I do find that 5 is a great starting point. 3 and 7 are also interesting. Could go as high as 11, and in some of the other tools I do. But generally for the bands themselves, I like to keep it around 5 on EMA settings. But there are plenty of other MA settings here, including a couple of very interesting ones that react in quite unique ways. The last couple things we'll look at here are the support ribbons and the resistance ribbons. S2 means, again, here we're looking at support 2. S3 over here is support 3. R2 is right there, resistance 2, and R3 is that band. So we're looking at the multiplier layers and the multiplier factors. So if we have it on 1, which is kind of my favorite, these are the settings. I'm going to go ahead and put this on, let's say 1.5 for both our support and resistance. And then we're going to say 2.5 7 and 3.4, something like this. I do have support and resistance layer 3 on different settings, generally because Bitcoin is a bit more bullish asset. So the resistance layer to not break outside of it needs to be a bit higher, because when you have your massive blow off tops, I want to keep price action somewhere in that zone still. And you can see that we get a bit more noise here and there where we don't really find much useful information there. Resistance, yeah, again, not finding a whole lot of useful information. I do find maybe if we go to a 4-hour time frame, changing these settings might be a lot more useful. I think, again, the daily time frame default settings are my favorite. As you go lower time frames, you'll definitely need to adjust some of these settings to get the ideal interactions. All right, for the sake of speed in the video, I went ahead and adjusted the settings in the ribbon indicator just the slightest bit on the 4-hour time frame to give us a bit better settings for a lower time frame. Exponent AI is on 0.6. I would probably adjust that a little bit more. It's not picture perfect yet, but it's getting close, and the support and resistance ribbons right here, the settings are right there. So again, I would probably adjust these the slightest bit, and to know how to adjust them, I'd do a little bit of back testing here. Just starting recently, we did see the nice bounce off of that dotted support line and looking for the upward bias after that. So that is, not too bad. We did see our resistance dotted midline holding resistance pretty well, and when it did not, it at least kept it below the resistance 2 band. So again, nice zigzag pattern here where it's finding support and resistance. This one was a bit of a fake out where if I would have been looking at this, a close below that midline would have been a little bit more, at least downward bias into that. So that was a bit of a failure there. But that midline did find nice support most of the time, and that we were not seeing our to the upside. We weren't seeing the break of that. So it was a nice, again, creating some zigzag patterns with useful information off of most of these. All right, let's enable the touch lines and go through the use cases for these. Now, I do find that these are most useful on the daily time frame. That is absolutely what I built them for. On different assets than Bitcoin and different time frames, these are a bit more hit and miss. But again, you can adjust the settings to try to set these up in a useful way. All right, so here is the general outlook on the way that I use the touchline system and the way I designed it. So what happens when you have the touchline system enabled and price touches the resistance 1 band or the support 1 band, which is down here, is it creates a target area of interest to the up or the downside. So as soon as that was hit back here on April 22nd, it created a target for $103,000. And you can see it took a little bit of time, but price did eventually nicely wick up into that and find a bit of a consolidation around that period. So that to me would be a success. That worked out great. Again, we had another touch into this band, and we saw this touch line kind of projecting future out that we are going to be looking for upside bias. And again, it got hit here after a bit of sideways consolidation, got that upside, and finally had another touch line to the upside. Now, this was a quite a long consolidation. However, the band or the touch line never got invalidated. The way that a touch line gets invalidated is if price does not, way back here, actually it called the top perfectly in December of 24, called that twice, but it's considered invalid or not of use anymore once the resistance band cuts it off by closing below it. So I would consider this one from back here valid. Actually, that was a success. But there are going to be some that you see that aren't. For example, let's go back here and look at this. So this touch line absolutely was valid, and it was a nice consolidation period. We saw some downside price action, so that was very much very useful. Again, this one was also useful to call this top. However, we saw one more touch line formed right here in July of 25, July 14th of 25. And this one was never fulfilled. So we were looking for upside bias based on that to 129K, and that was invalidated. So again, that was a failure, but one failure out of, a good amount is not so bad. And then just recently we saw a few touches here creating more upside bias. Now again, if this indicator or this the top side of the band comes down and cuts these off, those will be invalidated. However, I am still having a bit more upward bias until that happens, at least to 131K. or 132, 133 area. So that's the general upside targets based on that. And you will see that there are times when price will touch this and not create let's look at that actually. So the reason for that is if it, well, I guess it does here. Yeah, so price has to have two scenarios for it to create a touch line. One, I said earlier, it has to touch that. Two, it has to be more than one bar apart, and it has to not be closing above this. So in bullish scenarios, I didn't want the charts to get too messy, and so in very bullish scenarios, when price is continually closing above that line, you'll get less touch lines. So for example, right here, it did not create a touch line there, even though price would have, actually wicked into it and found a nice area of consolidation there. It, for the sake of having too much noise, it actually did not print a touch line right there. However, it did print a few touch lines back here and called this this move to the upside. And there are absolutely touch lines to the downside. Those are, first of all, usually hit sooner just in the world of Bitcoin. So created a touch line right here, and then we had about a 7% move. I believe that was 7% when I was looking at it earlier. Down, yeah, 7.3% down into that touch, just immediately got fulfilled, and a nice bounce off of that. So that was a success. We did see back here a failure, and the support touch lines do tend to fail more than the resistance. Again, Bitcoin is a bit more bullish, and these don't always get fulfilled. So that was not fulfilled. However, this one back here was, and that was again a nice turning point for Bitcoin. So these are a bit of unless we are in major breakdown or runs to the upside, these are generally calling the extreme moves and a nice point of looking for some consolidation there. So that is the touchline system. Let's take a look at using the RevinRibbons in the skeleton key. If we do want to make it very, very cut and dry, this is how one of the ways I generally like to use it with the skeleton key. The price history of this is only going back to, I believe it's 2015. I do have a break even after 12 bars at 8%. And besides that, just emergency risk here. And the only other inputs are the RevinRibbons themselves. This can also be used with other indicators to really optimize a bit more. But it says entry upon closure less than the resistance dotted midline. So our entry point for this specific strategy is quite high because this is more of a trending. This is not a swing trade. This is more of a trending strategy. So that means when price has momentum to the upside, we're going to enter along. So resistance price close less than the dotted midline. However, it has to be more than support 1. So price has to be between support 1 and the dotted midline. Now, this most recent trade was a very, very long trade, and it's not super profitable. It was profitable, but not a huge profit. And there was plenty of other places to scale in here, pyramid in. However, again, when you're bouncing off of this dotted midline and not really closing below it, because that's how the indicator is designed, you're not going to be able to find as optimal of entries unless you trade a bit more by hand. But there was plenty of other places to maybe pyramid in here. There are a good amount of trades here that win. It's 85% profitable, which is pretty incredible. 2.6 profit factor, which is not so bad. And again, we're just entering when price is in a generally bullish posture and exiting the trade when we close above that dotted midline. This as well is a bit more of a trending strategy. When we have a bar close crossing over the support band right here, that means we're looking possibly for some more upside. We do have historical bars on 1, so that means it has to do it at the previous bar, and it's valid for 1 bar. And the exit is just closing greater than resistance 1. So there are plenty of ways to optimize this. I don't think I even have literally nothing else. Just the most simple of strategies here. But there's a couple ideas for how it can be used in all your strategies. So, all right, we're going to leave it off there. I hope you guys enjoy this indicator, and thanks for watching.